It's my pleasure to introduce, to frame our conversation, my friend and colleague, Cy Richardson. He's the Senior Vice President for Workforce and Housing Programs at the National Urban League, and he's responsible for developing and implementing the programmatic work that our affiliates do in pre-purchase housing counseling, foreclosure mitigation counseling, financial coaching, among others. And not only is Cy someone who is extremely credentialed and excellent at his work, he really embodies the passion of the movement. So will you please join me in giving an applause for Cy?
Thank you. Good morning. Just a few minutes of framing observations and remarks. So, I think this panel really cuts to the heart of the question around the economic life chances for people of color and communities of color in this country, which I believe how that can go is as narrow as the edge of a razor. And I do think public policy has a lot to do with the direction and rate and pace of that direction that we take. The National Urban League's affiliates are on the front lines of this work, and this work being, how do you prepare individuals and families to take on the opportunities and challenges for owning real property, and how do you contribute to the safety net that protects them when that transaction goes sour? The Urban League's in the front lines of that work. As I mentioned, we see more than 30,000 clients a year for this work. And again, we're not Johnny-come-lately to any of these discussions. There's no part of today's event that is uninteresting or unrelated to the Urban League's mission. And the key thing I want to just mention is that 100-plus-year-old organization, but for the last 40 years, really, as I say, in the trenches and front lines of this housing and home ownership work, through large government contracts with HUD, Department of Treasury, and many of the partners in the front of the room today. My boss, our boss, Mark Morial, in about 2007, really first started to understand and get a handle substantively and rhetorically around what our affiliates were seeing and hearing. They're the pulse of the movement for us. And at that point, we began to see two things. One is that data started to stream in through our affiliates for our analytic purposes that pre-purchase housing counseling, that is, the preparatory steps to get people prepared to become in a state of what's called mortgage readiness. That is, we affirmed that they had enough knowledge, confidence, and acumen to be able to shop for mortgage products that were both affordable and suitable for them. In that process, we began to see that those folks who went through pre-purchase counseling generated better outcomes in terms of their ability to sustain home ownership. We also began to see a large influx of folks who were cycling through our affiliates in search of what they call loss mitigation home retention counseling. That's just folks who got in trouble, folks who needed assistance to tap into government programs, et cetera, who needed loan modification assistance for the banks. That volume doubled in the span of a few months, and we've been in that period of unpleasantness for the last half decade. Now we've come out of it, we have a little bit of perspective, and we can see where we went wrong, what worked, what didn't. And along the way, and I have to give Mark credit for this, we had to actually begin to fight a rearguard battle with the less enlightened of our colleagues around what the root cause of the crisis was, right? So we had to kind of fight and battle the prevailing and popular meme around black and brown people caused the recession, the subprime crisis and meltdown. It was Fannie Mae, Freddie Mac have done this. It was individuals who took out what we call liar loans, which I also think this guy XD who was on the panel before has really talked about the use of language. And I think it's something we can learn from those on the other side who talk about liar loans, the same folks who I think talk about death panels and talk about just different ways to use language that I think we would do a lot to learn from. So the last thing I wanted to say is that Mark coined this term, the weapons of mass deception, all of these dynamics that we had to kind of refute in terms of the root causes of the crisis. For the last several years, we've been making the circuit, trying to enlighten, open the eyes, and to demystify these myths. And I think this, I would like to say, has become a settled question, but I do think in light of the political happenings of yesterday, I think we're probably going to have to reimagine that. So the last thing I'd like to say is home ownership is very important. It's about economic opportunity. And I also think now that the election is over, I think we should be able to get beyond the platitudes and the generalities around home ownership. Yes, it does promote civic engagement. Yes, it does produce better outcomes for children. Yes, it does catalyze higher rates of voting, et cetera. But I think we need to get into the details here about this question. So I'd like to be able to focus on this panel around what do we actually do? What are the mechanics, the guts of these policies? How do we deal with mortgage interest deduction? How do we help catalyze and see down payment assistance? How do we really attack the affordable housing goals that Fannie Mae and Freddie Mac are on the hook for? And also, how do we expand this conversation just from home ownership to home ownership as one peg in a larger game around the racial wealth gap, and how do you build economic prosperity and to help people sustain themselves in the middle class? So I'm glad that I don't have to go too far to have this kind of intentional and provocative discussion, and I'm very glad to have the opportunity to be on this panel. Thanks very much, and I'd like to pass it to our moderator. Thank you.
Okay, so now it is my pleasure to introduce the rest of the panel today. Next to Cy, we will have Brenda McDuffie, who's the president and CEO of the Buffalo Urban League, and she's also the co-chair of the National Urban League's affiliate Housing Policy Task Force. We can applaud. Next, we have Frank Nothaft, who is the vice president and chief economist for Freddie Mac. And Mitria Wilson, who's the Director of Legislative and Policy Advocacy for the National Community Reinvestment Coalition, a key partner of the National Urban League, and recently the cover star of Women of Influence for, is it Housing Weekly? Housing Wire. And last but not least, our moderator, Karen Finney, political strategist and commentator, who flew from New York this morning after doing a taping for New Day to talk about yesterday's results, with us in terms of housing. So thank you all, and we look forward to the conversation.
So I wanted to have this conversation kind of in the context of last night's results. Ouch. Because I think the political dynamic is relevant in terms of, there obviously the Urban League has set forth policy goals, but I think the political dynamic that we live under will have an impact on the ability to get some of those things done. And I guess part of where I actually wanted to start is maybe, Frank, I'll ask you to talk about this a little bit, and Cy, maybe you can weigh in as well. I want to root this in, Cy, you were talking about not just home ownership, but wealth attainment. And I think, a lot of people don't realize that, there are systemic structural reasons that go back to, post-Jim Crow, the 20s, the 30s, the 40s. I'm thinking of a fantastic piece that was done in the Atlantic about the case for reparations that really went through on the housing context specifically, redlining and sort of the things that happened that really set African Americans back at a time when many generations of families, that was when they were attaining and maintaining and growing wealth that they would then pass on. So I wonder, can we talk just ground us a little bit in sort of what was going on in that period of time that kind of got us to this period? And then obviously we know in 2009, I feel like we took like a double hit.
Yeah, that's a really good theme to start with, Karen, because housing has been just such an important component of wealth accumulation for families in America. For most Americans, and for most American families, it's really the acquisition of housing wealth through home ownership that generates most of the wealth that's really easy and attainable for your typical family. Now, if you're a high wealth, high income individual, you have many other sources of investments that you can use to accumulate wealth. But for your typical American, it's much more common to accumulate wealth over time through home ownership. And that's what's been the case for much of the last 50, 60 years here in America. And that's why home ownership and that attainment of home ownership is so important for many lower income, middle class families, for accumulating wealth and building wealth over time. And what we've seen with the home ownership rate, as I think you're all aware of, we did see a big increase in the home ownership rate for the U.S. as a whole, but especially for all different race ethnic groups from the mid-90s up to about 2004, 2005. And then it started to come down, and it's come down substantially. So that today, for black households, the home ownership rate, which was close to 50% a few years ago, has now come down to about 43%. And if we compare the home ownership rate for white non-Hispanic households with that for minority households, there's a huge home ownership gap. Now, that home ownership gap has been there for many years, but the gap today is about 25 percentage points. So there is a big gap, and I know from my perspective, unless the housing finance system finds ways to try to find ways to make credit generally more accessible for first-time home buyers, we're going to see that large home ownership gap potentially remain in coming years. So I think it's really incumbent upon the mortgage industry to find ways to take steps that potentially can reduce that home ownership gap over time.
So,
Can I just add
yeah.
to that point? Because
Absolutely.
I think there are two issues I'd like to just make. One is that I'm deeply concerned, using the home ownership rate as an indicator here, that this period, as I say, of unpleasantness that we've been through has really served to blunt the endeavor of African American individuals and families who would organically enter the home ownership market every year. Mm-hmm. And folks are saying, you know what? Is it safe? If it's not, I'm going to sit on the sideline and selectively rent. Mm-hmm. And I think the cumulative effect of that over time is creating a generation of renters who actually could have the economic and financial acumen credentials to own, and who historically have owned.
So I want to actually put this question to the panel, because it was actually something that we talked about in talking about this panel. And I asked this question, I own my apartment because my father believed it was incredibly important. It was important to him that he owned his home. It was important to him that I own my home. But you look at what's happening in real estate, and I guess the question that I have, and I think what you're pointing to, Sai, is real estate still the best way in this economy and the way the economy has shifted? Should that be the goal for millennials? Should that be the goal for young people in terms of, owning their own home? Is that still a key part of wealth attainment?
Just real quick, I think yes, it's still a good bet, but two, I think what we're seeing here is a break in the cycle. In many ways, the knowledge about how to prepare yourself and how to do that is being broken here. And how do we kind of make up that kind of knowledge gap, which I think is also fueling the racial wealth gap?
Mitra, you want to weigh in? Is it working?
Is it on?
Yep.
All right, good. I actually want to add to that, and I want to challenge you just a little bit. I don't know that millennials don't want to be homeowners and have selectively chosen to rent. I think when you look at the numbers, the reality is that young people are not able to access the mortgage market. Sure. And we have to be real about this. If you look at the 2013 data from the Home Mortgage Disclosure Act, 332,000 Black people in the entire United States got mortgages last year. 332,000. It's not that young people or people of color don't want to get mortgages. They know what the market is reflecting, that if they apply, they will not get the loan. And that's the real issue that I think we have to talk about going on right now, because I don't think that it's a question of whether or not people of color want to be homeowners. And I know that when we look at the statistics, the reality is this: 66% of the average American's wealth comes from home ownership. So even though it's great to think about Wall Street and to think about owning businesses and those sorts of things, the simple reality is for the average American, if you're going to obtain any wealth in the United States, you're going to do it by first owning a home.
Right.
So we need to actually deal with what the markets are actually allowing people of color to get credit for.
Brenda, you want to weigh in?
I'd like to weigh in. As you know, I represent an affiliate, and at the local level, I can say we have people coming in our doors for our pre-purchase counseling program each and every day who want to own their homes. And if we're really talking about addressing the wealth gap, we have to go back to the foundation that has allowed us to build equity. What we have to recognize is what was destroyed, and that was the wealth that had been accumulated in the African American community through home ownership, through this crisis, and gaining access to credit again, okay, is something that's keeping a lot of young people from even entertaining. And then I'm going to compound that by also talking about and relating it to the topic that we talked about earlier with regard to workforce, because in order to gain access to high quality jobs where you can save and then invest in home ownership, those opportunities have to be available. And then we look at student loan debt.
Yeah.
You cannot buy a house in this country if you default on a student loan.
Right.
So, therefore, we've got to deal with all of these issues that are interrelated in terms of how we address our economic well-being as a nation
And we will,
as a community.
but I'm going to try to take it one at a time. So let's keep this organized. Let's start with, I mean, again, I sort of went back to go forward to suggest that, until there was, or not until, but, it was a lot of the policy fights of the 60s and 70s that enabled African Americans to start to attain wealth. I mean, so that when we talk about the progress that was made, I'd like to talk about, so what were some of the most important things, the Fair Housing Act, that we needed to fight for in order to get where we were? And then what does that mean in a modern context? Now that we're on the other side, because I hear what you're saying in terms of, and I want to come back to these issues about, attaining credit and what have you, but I also think from a policy perspective, there's some pieces and some things we need to be looking at. I'm thinking also of Johnson Crapo and sort of ways that we need to reform the system in order to then work within the system to make sure that our people know and understand, what it takes to get a loan, and how to manage between a student loan and a mortgage. But can we just talk a little bit about some of the reforms that we're looking at now that we're on the other side of 2009, and we know there need to be some changes to housing policy.
Can I weigh in on that? Because Johnson Crapo is one of my favorite subjects.
I thought it might be.
And housing finance reform. Just as a precursor, I think one of the things that we need to acknowledge is that the federal government has been actively involved in actually creating a middle class through housing policy since the 1930s. But for 40 years of that time period, they specifically precluded African Americans from participating. So the result has been disinvestment in communities of color and a lack of home ownership. At the time in which the laws actually allowed, which were in the 60s but not enforced until the 70s and 80s in any meaningful way, for African Americans to participate in the credit markets, there was actually a very slow trickle of credit. So the reality is that African Americans and people of color who have been able to legitimately and fully participate in the credit markets only from the 90s up into the early 2000s. And at the point at which you saw the home ownership rates actually really increase for African Americans, and by increase I mean that goes up to 49%, which is still below Great Depression levels for white Americans in the United States, right? At the time which you see African Americans even getting to that level, the reality is that those investments were made in a predatory nature, and they were actually refinancing mortgages, safe 30-year prime credit mortgages, into subprime products for people who are already homeowners.
Right.
Because the home ownership rate for African Americans during the subprime crisis actually went down and not up.
Right.
So black people weren't getting loans. I say that all to say that federal housing policy is obviously very critical in how people of color can gain access to credit. But sadly, it has not been used effectively in this time period. My greatest fear about the future financial reforms that are coming is whether or not, in an effort to overcorrect for the predatory nature of the market, we have actually limited the possibility for people of color to get credit.
And say why, and then I would like you guys to weigh in.
Sure. I mean, I think one of the key reasons is that we are increasing the amount of restrictions. So, for example, one of the things that we had to fight really hard, and National Urban League did a great job of this, was to fight to exclude credit score requirements hard written into legislation and regulations by the federal financial agencies. So if you're requiring a 700 credit score as a minimum, you're going to knock out people of color, by and large, because traditionally we have lower credit scores. Now, is that a reflection of the fact that we have less credit worthiness? No, it's a reflection of the fact that we use credit in very different ways than in which majority societies have been able to utilize it. And it's also a reflection of the fact that they've actually had a family environment where they're transferring generational wealth. And we were precluded from participating in the system that actually generated that wealth. So eliminating credit score requirements, hard written into underwriting guidelines. Down payment requirements are huge. People of color, for example, don't have as much generational wealth. So mom and dad can't give you a down payment. If mom and dad can't give you a down payment, requiring that you put 20% down is unrealistic, particularly given the income differences that exist for people of color.
And Sai, I read in the Urban League materials that for most African Americans, it's about 20 years to be able to come up with the,
Yes.
I mean, and 5%. I mean, and in most markets, it's 10%.
Yes.
So we're talking about at 5%, 20 years to be able to just come up with the down payment.
Right, and this is the kind of granularity I think we need to have in this discussion. I mean, in all of our kind of economic challenges in the country, one thing that people are not really looking at the mechanics of is how typically government seeds and supports down payment assistance at the municipal level. In many ways, it's block granted to states and then municipalities, but in many ways, mayors and governors have to be creative in how to use those funds to fill potholes, do sidewalk capital repairs, that really have sucked away the interest and commitment to down payment assistance seeding. And I think that is a little known problem that's going to come home to roost, particularly for the communities that Mitri is talking about.
And how do we address that? Is it, as you said, is it the mayors? Is it at that level when we're talking about the block grants? Is it at the state level? Is there more that we can be doing to educate governors? Is it, I mean, where you said you want to talk solutions.
Yeah.
So I want to press the panels. Just let's take that one problem. How do we deal with that?
Well, I also think, and I'll jump to Brenda, but I think there's no level of government that's immune from being a stakeholder in this question. I do think these are difficult times. We don't have the slack resources available to us, but we can't jettison the commitment to home ownership and wealth building. I do think the other sectors, the nonprofit and the philanthropic space, can do a lot to innovate new ideas. I mean, it's kind of old wine in a new bottle, but the whole IDA structure, match savings accounts, purposely for asset building, I think will become in vogue again. And I think it's something that the largesse of the philanthropic community can get behind.
Brenda?
I think at the local level, one of the things that we've been pushing for in our community is that in information sharing at all levels of government. So as you said, it's not only at the state house, but it's at the local level with our mayors, because we know that without that investment by them, it's unlikely that we can then leverage private sector and philanthropic dollars. And we've been very successful in that in many of our first-time homebuyer programs. Many of your financial institutions are offering assistance relative to matching programs, which encourage savings. So if you save a certain amount of money, up to $7,500, the banks will match it, which gives you not only that down payment, but someone else is also embracing the fact that you're now saving and investing and you have a stake in your success. Now that's only, and it should be only, after someone goes through a pre-purchasing program. And that's one of the things that we do in urban leagues throughout the country, because it's not as much as buying a home. We want people to be able to not only own it, but retain it until they get ready to do better and more in terms of houses that they can afford. So we want retention of home ownership, and so we do pre and post purchase counseling within our communities to ensure people are prepared, because life does happen, and you do lose your job.
Frank, did you
wanted-
weigh in?
Yeah, I wanted to second a couple of the themes that Brenda has touched on. One is information and the other is counseling. And I think both of them are really important. And right now, there's too much misinformation and poor background that a lot of potential first-time buyers are hearing or receiving. And so the better the information and the more education and counseling opportunities that they have, the better prepared they are for being successful first-time home buyers and actually retaining home ownership over time.
So, Mitra, here, just building on that, I want to talk a little bit more about Johnson Crable, because I think, the question that I think it raises is, does the federal government have a role to play in setting, which I think it does, but let's talk about it, because some who are opposed to the legislation said there's too much money going to low-income people as it is. Didn't sound like it to me from the numbers you cited, but okay. But what role the federal government has in setting targets for the rest of the country?
I mean, I know that there are a lot of people in the House of Representatives, particularly Congressman Hinterling, who believe that the federal government plays no role in housing or should not play a role in housing. That means for the about 60-something% of the United States population that bought homes, that they need to recognize that the federal government, in fact, is largely behind their ability to purchase those homes. It is a misnomer for poor people, for middle-class people, and even for wealthy people to believe that the federal government is not subsidizing your housing. That's why you have a mortgage interest deduction. That's why you have a jumbo loan interest rate that is actually reflective of the conventional mortgage interest rate, which is subsidized by the federal government. You don't own a home in the United States where the federal government is not subsidizing it, no matter your class level. So now we come to this question of whether or not we should continue that as a policy. Well, given the fact that we know that 66% of people's wealth actually comes from home ownership, the decision to not continue it means that we're going to change the socioeconomic status of the United States by and large. And the reality is, with a shrinking middle class, I can't understand why any politician would be supportive of somehow making Americans who are already facing economic challenges poorer. So that's the political question that I ultimately think that people who challenge the notion of having the government back up housing are really saying, and that should trouble us.
So, what role should financial services organizations play in this, and what role can they play in this?
I think that's a profound question, because I think I think there's no bigger dog in the fight than the financial services firms who, by their very mission and business model, has to provide affordable credit to the marketplace to ensure that our economy functions at that level. I'm deeply concerned that this whole conversation, Karen, has turned into a minority home ownership question or problem. And I've always observed that that's telling half the story. Because in many ways, these millennials we talked about, these young people, households of color, have to be prepared, poised, ready to purchase homes that white America needs to sell to finance their daughter's education, college, vacation, a second home. That's how the marketplace works.
Right.
So to kind of bifurcate the marketplace, say mainstream and then the communities of color have a problem over here.
I think we were talking about 66% of Americans,
Yes.
actually, so we were talking about everybody.
Yes, but I think it's...
I guess my question is, I think that the financial services companies can play a role both in access to credit,
Sure.
As well as home ownership. And we know that they were some of the worst, I'm thinking countrywide, bad actors in the past. So how do we leverage that to make them do better?
This is where regulators actually really matter. This is why the CFPB and its regulations, the Federal Housing Finance Agency, Fannie Mae and Freddie Mac, really come to play. I mean, the simple fact of the matter is one of the reasons why there's not credit being given to first-time buyers right now and millennials and first-time buyers is because lenders have decided to attach credit overlays. So even though that they know that the credit box is actually significantly much larger for federal government products, they've decided that they only want to lend to a really tight niche. It is the fundamental responsibility of regulatory agencies to challenge financial institutions when they make those decisions and to push them to expand access to credit in a responsible way. And so much of our effort, especially given the results from last night and the midterm elections, have to turn to regulatory focus and push regulators to do the job that they were hired to do.
But isn't it partially also with these financial institutions to see this as in their interest? I mean, if you're talking about wealth creation in this country, not just in the minority community, but the more money people have, the more money they spend. I mean, it's a cyclical thing. So and it seems to me that particularly given that we're now looking at a much more conservative context politically, although the Washington Post thinks that Johnson Crapo is maybe an area of compromise in terms of housing reforms. I guess my question is, doesn't that mean we need to build more coalitions to try to, as you said, come up with creative ideas about how to do this, whether it's...
I gotta say, I think this issue is immune to collaboration, honestly. I think folks are really entrenched. I've gotta say, I'm a little bearish on Johnson Crapo. I mean, Senator Shelby may become the chair of the Senate Banking Committee. He voted against the bill.
Yeah.
So I don't understand, the prospect for movement is one thing. I also want to say, getting back to your point about the banks, their mission is to lend and invest. So you have all the banks, and I got to be honest with you, most of the big banks are on the National Urban Leagues board, and I think we have a role to play here to nudge and to push. But I mean, you have the banks sitting there like Smog the Dragon, sitting on top of this big pile of money that's not doing anything to promote commerce and to better people's lives. That's a problem.
I guess that's what I'm getting at, is in terms of the urban league specifically, knowing that you have the big banks, many of them on the board, what can the urban league do to, as you said, help nudge that process? Maybe embarrass them.
Well, you know what? I don't disagree. I do think it's through our frontline folks. It's evidence and data that really kind of elicits a response and reaction. I think Brenda might be better positioned to speak about how we can leverage what we're seeing and hearing to move banks and to open their eyes to this perspective.
And that's exactly what we've been doing at the local level. We've been really challenging the banks around rebuilding the communities and really creating, and I think that's the way you get people to move. You have to understand that this is a win-win. It's not only the individual who's impacted, it's a neighborhood, it's a community. When people buy homes, they are in a better position to buy products and services. And guess where they put their money? They're not only paying interest on your loan, but their money, their savings, their direct deposits are sitting in your institutions gaining basis points every single night. And so if they're going to let that share of the market and the economy be neglected, shame on them. And I think one of the things we can do is organize, and we've done that at the local level with many of our housing advocacy agencies around the accountability back to the banks that they must make the investment in the communities that they serve.
And then how do we, I'll put this question to the panel, because I know when I bought my home, part of the reason I didn't do it for years is it was such a daunting process. From all the paperwork, terrified of having knowing my credit score, right? As if, I was gonna explode once I knew the answer because I was just sure it wasn't gonna be positive. And I think a lot of people go through that. So how do we help people, and I know this is a lot of the work, Brendan, that you're doing, and I know there are a lot of ways to help people both understand the process, but to see themselves as people who can be homeowners, because I think that's the other part of the problem, and I wonder also, Mitra, I want to get your take on this with millennials. I think a lot of young people don't see them, they think, oh, well, I'll do that when I'm older, that's too hard, that's too, and so I guess the question is, how do we help people see themselves as, someone who can get credit, someone who can get that down payment, someone who can access, ways to help get a matching program and then be able to buy a home and stay in that home, as you talked about.
In a knowledge-based economy, we've got to give them the information. It's very easy to see neighborhoods within all communities where there are a large share of African American homeowners. So guess what? I did it, you can do it. We also need to be able to provide them with a base of information that demystifies the process. Yes, closing, you're going to sign your name 100 times, and that's probably at a minimum. But, that's what we do in pre-purchase counseling. We walk them through everything. And one of the things I say to young people, I'm getting ready to have a big fundraising event. And I bet all of you, and I'm talking to my young professional group, will spend more time running from store to store to find that right dress than you will spend in trying to find a bank that will provide you an interest rate and a program that assists you in building wealth, which will pay off many, many more times, because you won't want to wear that dress after our big event. But guess what? You'll be living in that home for the rest of your life. So we've got to break it down and really talk directly. I feel I have a responsibility as an urban leaguer and my colleagues across the country in making sure our community understands the importance of savings and investing. And home ownership is your investment in where you're going to live, not necessarily for the rest of your life, but at some point in your life.
So, I'm having a funny thought here, but I used to always be able to get on these panels and say that I was a millennial, but unfortunately I had a birthday 3 days
Sorry,
but
sweetie.
and I officially am no longer, I think, within the right age demographic to claim that anymore, unfortunately. But I will say this, I want to reiterate, every time you see studies coming out about homeownership, there's all this talk in the press about millennials not wanting to be homeowners, those sorts of things. Every study that you always see says the exact opposite. Millennials definitely want to be homeowners. The reality is that given the employment situations that have been going on, and given the increasing prices of rental housing in the United States, they're finding it incredibly difficult to be able to qualify to get into the market. The thing that I would say to millennials, and the thing that I would say to this room, even if you're not millennials, it's important to pay attention to what housing finance reform and Dodd-Frank accomplished and what it did not. Most people think that if you go to a financial institution and you request a loan, that your institution is required to give you the best rate that you qualify for. That's a lie. They're not. They're required to give you what they think you will accept. And where we went wrong as a community of color is that we presumed that what they were giving us was actually what we were entitled to.
Right.
All right, so the benefit in housing counseling and pre-purchase counseling is going and getting informed so that you can be prepared to actually challenge those notions.
And Si, I saw you kind of shaking your head. I just want to make one point that I want you to respond to add to that, because I think this is how a lot of people got in trouble, right? When I went to my guy, I said, this is how much I want, right? I don't, and he was like, well, you could afford to do a little more. And I think to your point, people assume, and this, I think you're, in terms of education, you assume, well, if the bank is telling me I can afford more, then it must be okay.
Sure. I mean, I think the problem there, and Dodd-Frank went a good distance to kind of addressing this, is the perverse nature of the incentive system to push products that are not in your economic best interest, they're not affordable and suitable for you. And again, it's from an information and confidence and sophistication deficit. Our communities are signing up for these things. Getting back to your original point, Karen, historically, our communities have only wanted to get to the yes. Yes, offer me credit. Yes, offer me investment opportunities. And now that went overboard and yes all over the place for these products that were so exotic, no one could understand them.
Sure. Well, and I think to the point that Mitra is making,
Except
Frank, I'll let you
Frank,
weigh in, that's the point of, and Brennan, this is the work that you're doing, getting yourself educated and making sure that there is open access to information to educate yourself, because it's not just about home ownership, but responsible home ownership and responsible investing as well.
So there's a recurring theme about information and education. I'm really glad to hear that. And I think there are a lot of challenges for our educational system, but to me, we should be putting more emphasis and resources into financial literacy in middle school and high school, because too often we have our kids coming out of high school and they're completely unprepared. They're unprepared for thinking about credit, and they're presented with these credit cards and they sign up right away, and they don't fully understand necessarily what they've signed up for. Too often, people come out and they don't even understand what an interest rate is. How do you measure it, and what does it all mean? And so I think it's really incumbent also upon the educational process to try and introduce more of that into middle school, high school, so that we have students who are coming out much more prepared to be part of the market and understand how to use credit responsibly. And at Freddie Mac, we've had a product that we've had available for many years called Credit Smart, and it's been a product that we've used to try to provide that information, that education, directly to consumers, but also to our lending partners so that they can use it, and home ownership counselors can use it as well to help in that education and that information process. So I think that's very important. And I'm glad you brought up millennials and their desire for home ownership, because I see that too when I look at these different surveys that have been conducted on attitudes toward home ownership. What's pretty clear to me is that millennials do have the same desire to transition into home ownership as their parents did. But what's different is that they're concerned about their jobs, they're concerned about their income, and what's very clear is that they're delaying that transition into first-time home ownership. And what's really so important for the economy going forward is not just creating jobs, but creating good-paying jobs.
Right.
And Mark Morial mentioned that as one of the 3 Ds, right? Demand jobs, right? But demand jobs that are good-paying jobs. And if we have that, then we have the income flowing into today's young households so that they have the financial ability to transition into home ownership.
I want
I
to
just-
shift to answering questions because we got a lot of them here, and I want to make sure we get that in. And I'm going to start with a question about the millennials. How can the millennial generation gain access to credit when the average score approved is 780 or above? What about exploring forms of alternative credit? It seems as though ideas of changing the criteria for building credit is not something the federal government is interested in.
Can I respond to that? Because when I want to push back, the credit score is exceptionally high, but it's not 780. It's
But I was commercials always stress 700, right? I mean,
right.
that's the thing.
I think for conventional mortgages, you're looking at a credit score that's around 744. And then for FHA mortgages, which is, by the way that people of color right now are accessing the mortgage market, and a lot of first-time buyers, and yes, there's a problem with that. But that credit score is around 680, 690. It's still too high. The reality is that Experian released, I guess, its third quarter state of credit report, and it said that the average credit score in the United States was about 686. Barrett Burns from Vantage Score had a release recently and said that the average credit score in the United States was actually 656. So when you put those two things together, we should come away with the realization that most Americans, average Americans, can't buy homes right now, and that's a problem. So the notion about whether or not we should look at alternative credit, that makes me so nervous every time I hear it. And I particularly hear it every time I'm in a policy discussion with a bunch of people who don't look like me, who already own homes. I firmly believe that you don't need to change anything about the mortgage products that the United States has been originating. 30-year fixed-rate mortgages are a good idea. They helped build the white middle class in the United States for 80 years. They can build a minority middle class in the United States for the next 80 years. And so we need to not think that because the demographic is different, somehow the product needs to change. So I'm really nervous when I hear people talk about 15-year mortgages or shared equity products or something like that. No, Black people and Latino people in the United States need the same exact products that white Americans have been able to access.
Yeah, I think that's a great point. I think the ethos of ownership is very American. And I think to kind of cut that willy-nilly is very short-sighted. I mean, I'd also say that I think alternate forms of determining the credit worthiness of prospective borrowers is very important. The model of getting credit for the timeliness of rent payments, the rhythm of remittance payments, I think that has great explanatory power into the decision-making and risk for individuals. I think that's an area we can do more to learn about how we can bring in and adapt more of our models that way.
Well, but also, I mean, to the underlying racism that we're really talking about here, it is helping to ensure that our friends, our family members, young people understand you have a right to demand a 30-year fixed mortgage. That's what I got, and they, balloons and this year's and that. No, that if that's the best, then that's what you should be asking for, and there's no reason to be, thinking you need something different because you're different.
And guess what? If you want to turn that 30-year into a 15-year, make a payment every year, extra payments.
Yeah.
If you've got extra money, guess what? Use it towards paying down your mortgage. You pay a tremendous amount in terms of interest on home ownership loans. But I also want to go back to the FHA because I would be remiss because we're steered into those products. African Americans are disproportionately steered. And with the recent changes, we're paying much more to own our homes than our white counterparts. You're now paying FHA premiums for the life of your mortgage.
Right.
Not when you build 20% equity. You are paying it. So, as you said, demand. This is a negotiation process. Just like when you make an offer on the house, you can negotiate. When you go to the banks and you say, I have this amount to pay down, I know you have products at this rate. Hey, have confidence about your ability to pay back your mortgage. Show
But also the confidence to ask.
to ask,
Well, or
to
to
say
know to
that
ask.
I
To know to
know
ask,
it's
that's
out
right.
there and I want it because I paid all of these bills on time. And when I don't, guess what? I called my creditors and I made arrangements. I got laid off, and that's why. Make sure that's in your profile.
Okay,
And I think it's a great point because you can get low down payment conventional loans with private mortgage insurance, and the monthly payments may be lower than on the FHA loan. And as you may know, Mel Watt, the director of the Federal Housing Finance Agency, he spoke just last month at the Mortgage Bankers Association annual convention, and he talked about the challenges of getting lenders to take advantage of the full breadth of the credit guidelines that we have for buying loans. But he also talked about the provision of new products such as 97 LTV conventional loans. And indeed, that's something that we're actively working on. Freddie Mac had a 97 LTV program that we introduced about 20 years ago. And it was a very successful program because even though it has a higher LTV, there are compensating factors that we can take into account to offset the risk of a higher LTV, a lower down payment, to still make a loan that is still a good quality loan and helps to sustain home ownership for
I'm going to
borrowers
stop
who
you
take
because
those
we've got
loans.
more questions. I
I just want to
everybody-
ask Frank if counseling is compulsory. That's the key.
It's one of the compensating
Because
Right.
that's how we can get the
Right.
right information and responsible retention.
So I'm going to switch gears since it is the day after the election, and I think, you're very pessimistic about some of the opportunities, as is our audience. So I want to raise some of their questions. Is the future of Black home ownership on hold till 2016? Where and how can we successfully appeal to a Republican-controlled Congress to advance housing reform?
Can I say this? You don't need Congress to actually do what we need to do right now. That's the beauty of what's actually happening. There will not, I'm actually going to agree with Cy, there will not be any housing finance reform legislation coming up before 2016, mainly because Senator Shelby is not interested in pursuing housing finance reform, and it's too politically divisive within the Republican Party for that to occur. But the reality is that the reforms that we actually need, expanding access to credit, are regulatory changes. And this is a Democratic president who has a Democratic administration and ought to be able to make the changes that we need to expand access to credit. And we already see some of those changes happening. For example, Mel Watt asking Fannie Mae and Freddie Mac to reintroduce their 97% LTV products, right? So now you can make a 3%.
LTV products.
That means that you can now make a 3% down payment and get a conventional mortgage, which is good, right? Because that means that FHA is not the only place that you have to go to be able to get a loan. And when you know that people of color traditionally have a harder time generating the down payment savings, it means that we might actually have access to conventional credit. This is really, really huge because what's going on right now is that the only credit that people of color are really getting in the United States is through the FHA. And FHA, because it had a budgetary shortfall, is charging insane prices in order to make up its mortgage insurance fund. So we need the conventional market, which used to actually provide the majority of the mortgage credit in the United States to people of color. We need it to actually reassume its responsibilities and do that again. So I think that if we have a director who is adamant about pressing the federal housing the enterprises to actually expand access to credit, then we can do that. So down payment is part of it, but I also would be remiss if I did not say that even though Fannie and Freddie have introduced these products, they are also charging guarantee fees and something called a loan level pricing adjustment that actually is making it punitive and impossible for communities of color to legitimately access conventional mortgages.
So it sounds like what we're saying, and challenge me if I'm wrong, there are still ways to access credit, get a mortgage, but maybe no change in the law till after 2016 if we can get a different configuration in Congress. Is that a fair? And that some of these things, like Johnson Crapo, you don't expect to go anywhere in the next couple of years.
No, I'd agree with that. I also think, though, that to Mitra's point, I mean, there's nothing blocking or blunting the ability to get on the path for home ownership now, today. My earlier point was, though, that I think the path, to get on the path to endeavor to purchase a home is a very important first step. What we're seeing is folks who are economically poised to take that step are saying, I think I want assurances, and again, these are generalities. Again, this is anecdotes coming from our affiliates, because we're looking at our numbers, and the pre-purchase numbers are down, not for folks who've applied and been denied, it's for folks who've not applied. I think that is very dangerous, and that's an indicator that we're really looking at, because it's very difficult, coming out of the Bush administration, it's very difficult to gin up interest in home ownership and do it correctly. And I think that's really what the nonprofit space, how we were complicit, I think we have to be mature about that. All of us were contributed to this crisis, to be honest with you. And I think the nonprofit's role in that was to heed the clarion call to accelerate home ownership, and I think we need to be a bit more deliberative about that. I think the way to be deliberative is through counseling and financial coaching. That's my 2 cents.
So another issue that kind of comes up in the questions, which is also a policy/political issue, an economic issue, is the wealth gap and the broader sort of income disparity that we're seeing in this country. And so one of the questions says, we go to great lengths to subsidize home ownership in this country, but the mortgage interest deduction disproportionately benefits the wealthiest few percent of Americans. At the same time, we've struggled to subsidize renting for working Americans. Is it worth capping the mortgage interest deduction? And why is putting more emphasis on making housing more affordable for working people, many of whom are renting, currently on the back burner? We touched on this a little bit earlier, but I think it's an important question.
So I would say this, home ownership and affordable rental housing go hand in hand.
Yeah.
And it is simply not true that we can actually accomplish what we need if we don't have a meaningful investment in affordable rental housing. The reality is that right now it is more expensive in the United States to rent in various major cities than it is to own, right? And if you're paying, like those of us who I own a home now, but when I used to rent in Washington, D.C., I paid over $2,000 a month. For a one bedroom. When you're paying that kind of money, it's really hard to save money. I had to move into my parents' basement to save my down payment. I'm just being honest there. And so, you can't get to that point. But let me just say this, the mortgage interest deduction does need to be reformed in some meaningful ways. I doubt it's gonna happen before 2016. But the way in which I would suggest that it would need to be reformed is actually I think it needs a haircut, not a chop. And let me explain why. You should not be able to get a mortgage interest deduction for your vacation home. You should not be able to get a mortgage interest deduction credit for your boat. These are things that are happening right now under tax policy, and they clearly favor wealthier Americans. However, for working class Americans, you need to start itemizing your tax return. There is a financial benefit in coming from that. And I know people have said that it doesn't impact low-income people, but there's a really interesting study that says that it's at least 1.8% of the annual income for the 3 middle-income quartiles in the United States. There is an economic benefit in having a mortgage interest deduction. And that's why the 30-year mortgage is actually so important. If you do a 15-year mortgage and you buy down the interest rate to 1.25%, you don't get the tax advantage, right? So you're actually taking home less income and making a higher payment. So the system itself we have to be careful when we tinker with it.
So, okay, I'm just gonna ask this question blank. If you didn't know that, where would you go to find that out? Who would tell you?
To itemize your tax return?
Or any of the sort of tips and points that you were making. If I didn't know, where do I go? The Urban League?
That's where I would go.
Is the financial advisor, who's supposed to help me? Because I don't know tax law. I don't know the changes. I don't know, about deductions. A lot of people don't know some of these nuances that we're talking about that seem like they can make such a difference.
If we mandated that every person, particularly from our communities, went through homeowner training, they would know that. The other side of it is we're not only on that side, but we also do a lot of work with having individuals access any tax credits as well as deductions that they may get. And so guess what, folks? You should go see your Urban League because you would have been prepared and know that that is one of the benefits of home ownership, is being able to now itemize deductions and take off not only your property tax, but all the interest that you pay on your mortgage. So just think about that.
It's $100 billion a year in aggregate, this country, in MID. Why segments of the economy are on the sidelines of that is deeply troubling. And I think that it's become racialized and a proxy issue that I think we would do well to better understand. I do agree with Brenda, though. I mean, the home ownership is the end part of that journey. Actually, it's the middle part of the journey, because then you have to sustain the tenure over time.
Right.
But I mean, I think she's right. I mean, earned benefit screening. I mean, what are you eligible for? This is about saying, I'm an American, this is my right.
Yeah.
And I think a lack of knowledge and sophistication and confidence about standing up and being heard, we can do more there.
So here's another question that I think kind of shifts the conversation a little bit in terms of discrimination, in terms of where we buy homes. How does the affordability, in quotes, of homes in urban areas complicate home ownership among African Americans?
I mean, these communities are in vogue again, right? I mean, we had suburbanization, folks, white flight. We had those people of color who could leave left, but now we have empty nesters and in communities that have done revitalization projects like this. These are hip and cool and sexy places to live, but they're also very expensive. But these are historically communities, neighborhoods of color. I think it's different for each city, to be honest with you, but in the Northeast, I think we have a whole downtown revitalization strategy that is being undertaken on our watch that I think we need to be more intentional in understanding.
And I think our community, particularly as we usually live in those urban cores, has to begin to understand the value of them staying in those neighborhoods and be able to be part of the revitalization versus the gentrification that we see in so many communities where our property is being taken away from us or being undersold. And then being revitalized by someone else.
One quick thing. I actually, I always am amazed when people talk about the urbanization of cities and how that impacts communities of color, because when I look at the census data, the reality is that minorities are leaving urban areas and living in the suburbs because they can't afford to live in urban areas. And so much of our housing policy, again, is based on majority understandings of cultural norms. That we ignore the reality for what will be the majority of the housing market in the future. If you want to talk about the future of affordable housing in the United States and you want to talk about home ownership, you're actually talking about policies that will impact the suburbs and people of color. And people of color live in the suburbs. There are a lot of reasons for that. One, in urban cities right now, like in Washington, D.C., we're doing a lot of really, really small housing. But for Asians, Latinos, and African Americans, we're far more likely to have multi-generational households and therefore can't live in a one-bedroom condo or a 600 square foot or a 1,000 square foot townhouse. So these are just simple misunderstandings about the nature of the demographic that the market should be serving that as a housing industry we're missing.
But as you talk about demographics, I'd be remiss in talking to our financial institutions about the changing demographic. So guess who the future homeowners are going to be? They're going to be people that look like most of the panels sitting up here.
And Si, I'm going to let you respond, but I want to add to that, isn't part of the equation also, and we're only going to get to touch on this because we have to wrap up in a few minutes, it's also an equation of what you are shown as an option when you're looking for a home, right? If you are sort of pushed into certain areas, in terms of what's affordable for you, right? All the code words and language like you were talking about before, that also impacts it.
It does. I mean, I think we've come full circle. Fair housing is a very important, fair housing testing, fair housing enforcement, fair housing understanding is a very important arrow in our quiver, to be honest with you. I also want to make a point, a very mature point Mitria made, which is, and getting to the GSEs, understanding how people live today and the composition and structure of household formation. I mean, we think actually the GSE should have 2 to 4 family housing goals, whereas you have an owner and then rental units. I mean, that is something that we need to better understand how people are living, multi-generational households, but also revenue generating on vacant units in an existing building. That's something we should be tracking.
It's been really exciting.
Hold on.
It's been really exciting to see the revitalization of so many cities here in the Northeast and elsewhere in the U.S. too. But with that revitalization, that also bids up the land values, and I think that's one reason we've seen developers then come in and they put in higher density residential and commercial structures because the land value has gotten to be so expensive. And when they build these structures, it's hard to build large square foot structures to meet the needs of a multi-generational family just because it's so expensive. And that's why I think we do see so many families moving outside of the city.
But I do think, just to bring it full circle, I live right around here, and I've seen this neighborhood change dramatically. I mean, there's a fancy shishi Japanese restaurant in a small structure that used to be a barber shop where the fellows would sit around, and chat all day. And I never really see people of color being shown apartments in this neighborhood. And there are unmarried women, single people who are also looking. And so I do think this issue of credit, access to credit, knowing the process, knowing your rights, but also knowing where you want to live and that you have a right to live there and see those apartments and see those areas if it's something that you're
I
interested
have
in.
to
Can I
go
just
back
say-
to real life story because I live in the community and the Urban League works with our communities every day. So a house in our marketplace went on sale. It's a block from the transit system. It's an area that developers have basically taken over. The bank ran hoops around a young African-American woman who had bought a house in a foreclosure. Her mother's living in the house, and the bank questioned things like, why do you want to buy another house a mile away from a house you own? And we had to fight in order for her to address those issues with the bank. That is absolutely crazy. And the only reason why is they did not want to see her buy that house. She had every right to buy the house, and because of the support and counseling she got from us, guess what? She's closing December 1st.
Right on. So the Urban League is part of the solution. We obviously, in this conversation, I think we really scratched the surface of some of these issues, and I think we talked about some solutions. As the prior panel did, because I think it's only fair, I will give each of you 30 seconds. I'm going to ask you to hold to it as much as possible, and that's how we will end our panel. And I will start with you.
Sure. I do, going back to an earlier point we were talking about, I do think economic restructuring in this country and where the jobs are and the portability to those jobs and the kind of the less rooted we are in our communities is very important to understand that, to Mitria's point, that we don't overcorrect. There needs to be the right equilibrium and balance between affordable renting and affordable owning, and that question has a different equation for every person. The key is, I think, counseling, yes, but within that is a new initiative, financial coaching. Most people of any modest means or affluence has a financial advisor. Low and moderate income people can make progress as well with a customized plan developed with certified folks. That's something we're testing.
I'm going to say to all communities out there listening, as well as I'm going to urge you to spread the word, that kind of not only counseling and information sharing, but also the financial coaching, guess what, is available through your urban leagues. So you need to make sure that you're supporting those organizations that will allow us to grow wealth in our communities again.
I think I'll go back to what Mark Morial mentioned this morning, demand jobs. That's one of his 3 Ds, and I think that's just so absolutely critical. We've had job growth for the last few years, but is it good paying jobs, right? So what we need to see over the course of the next year or two going forward is not just strong economic growth that creates jobs, it also has to create good paying jobs. So we put more income into the pockets of all Americans, but especially lower income and middle income families, so they have the financial wherewithal to transition into home ownership, or perhaps even, if they are already homeowners, to move up in the home ownership ladder.
Mitria?
I would just encourage everybody to actively advocate to press financial regulators to finish the rest of the work around preventing discrimination against communities of color when they purchase houses. It should be no secret to anybody in this room, but the Supreme Court is poised to hear a case on disparate impact and fair housing. It is highly likely that this court will strike down the ability of community groups, consumer groups like National Urban League and NCRC from challenging racial discrimination using disparate impact cases. That means that the other laws, such as the laws that prevent steering in Dodd-Frank, need to be implemented. Guess what? Your financial regulators have not done that yet. We need to be very bullish on making them be accountable and passing the regulations that we need to actually enforce fair housing for African Americans.
All right, please join me in thanking our panel. And I just want to lend my thanks to the Urban League for keeping this issue front and center because it's so critical. So thank you.